Welcome to today's explainer. Imagine strapping into a rocket, feeling those massive engines ignite, and soaring into the stratosphere at absolutely breakneck speed, and then suddenly losing all thrust and plummeting right back down to Earth. Well, that is exactly what just happened to one of the most highly anticipated market debuts in history. We're talking about the SpaceX IPO. This company completely shocked the world when it finally went public, but the real shock actually came just days later. We literally saw billions of dollars in market value just vanish into thin air. The exact same investors who were fighting tooth and nail to buy in suddenly rushed for the exits. So today, we're decoding exactly how a historic launch turned into a rapid descent and what it teaches us about market gravity.
To really understand this crash, we first have to understand the launchpad. $135 a share, that was the initial price set for the IPO. And let me tell you, the stakes could not have been higher here. For years, Wall Street and retail investors alike had been practically begging for a piece of SpaceX. So when this $135 price tag was announced, the financial world basically held its collective breath. This wasn't just another company going public, right? This was a historic event.
But man, that $135 starting line was left in the dust almost immediately. In a matter of mere days, the stock absolutely exploded to over $225 a share. Talk about financial whiplash. The momentum was staggering. I mean, to see a company of this sheer magnitude surge by that much, that quickly, it's incredibly rare. The charts were just going vertical, and it honestly seemed like there was absolutely no ceiling. But as we all know, what goes up, especially at that crazy velocity, usually comes back down.
Okay, let's dive into Section 1, the historic SpaceX IPO, and take a look at those launchpad conditions.
So, SpaceX officially entered the stock market under the ticker symbol SPCX, and while $135 might seem like just a number on a screen, it amounted to an absolutely monumental capital raise. SpaceX pulled in approximately $75 billion. Let's just pause and let that sink in for a second. $75 billion raised right out of the gate. These are staggering figures that instantly cemented SpaceX as one of the biggest IPOs in history.
But the why behind that feverish demand is absolutely crucial. Like, why throw $75 billion at a rocket company? Well, because investors weren't just buying a rocket company, they were buying into a massive, futuristic tech ecosystem. They're betting on the global dominance of Starlink satellite internet. They're betting on the future of space exploration and eventual Mars missions. And crucially, they're betting on the artificial intelligence opportunities deeply linked to Elon Musk's broader network of companies. The hype wasn't just about launching satellites, it was about owning a piece of the future. And the excitement in those first few days of trading was electric. But, hype alone doesn't push a stock to those kinds of extremes.
Which brings us to Section 2, Anatomy of the Surge, and the actual market physics at play here.
It was classic supply and demand, but on steroids. We had millions of eager investors demanding a piece of the pie, colliding head-on with the reality of an incredibly thin public float. When you have astronomical demand slamming into engineered scarcity, the price doesn't just walk up, it sprints. You have millions of people who desperately want shares, but there simply aren't enough out there to actually buy. So the stock jumped from the $135 IPO price to an opening trade around $150, and then just kept tearing upward to that $225 peak.
And that frenzy pushed the company to an astonishing milestone. For a brief, shining moment at the absolute height of the madness, SpaceX reached a valuation above $2 trillion. $2 trillion. It's a number that's almost hard to wrap your head around, putting it firmly in the absolute upper echelon of the most valuable entities on planet Earth. But to really understand that massive supply shortage, we have to look a bit closer at how this offering was actually structured.
So, the crucial point is coming up here in Section 3, the locked shares effect, or engineered scarcity.
The key mechanism here is something called a lockup period. Basically, it's a restriction that prevents company insiders, employees, and early investors from immediately selling their shares right after an IPO. Because SpaceX had a very limited public float at launch, it meant the vast majority of the company's shares remained completely restricted. They were basically locked away in a vault, entirely untouchable by the public market. This engineered scarcity is exactly what created a situation where way too many dollars were chasing far too few available shares.
Which naturally leads us to a pretty great question. Why do companies even lock up shares in the first place? If we know it causes these massive volatile price spikes, what's the underlying logic behind this really common IPO mechanic?
Well, the answer is market stabilization. Without it, every insider who bought in at a fraction of a penny years ago would instantly mash the sell button to go buy their own private islands, right? The market would just be flooded with shares, supply would violently outweigh demand, and the stock price could completely collapse on day one. So the lockup acts as a dam, holding back the floodwaters to give the stock a real chance to find its footing. But eventually, that initial euphoric surge always runs out of steam.
Let's move to Section 4 and see how this builds, what caused the crash, and how gravity takes hold.
We actually saw 4 compounding triggers cause this descent. First off, profit-taking. Human nature just took over. Someone who bought at 135 looks at their portfolio, sees the stock soaring past 200, and says, yep, time to cash out. That created immediate, heavy selling pressure. Second, the whole dynamic of the market shifted. Options and short selling activity heavily increased as traders started aggressively betting that the price had risen way too fast and was due for a major correction. Third, the initial hype wore off and very real valuation concerns grew. And finally, just bad timing. Space stocks and tech companies got caught in a broader market weakness, which ended up dragging SPX right down with it.
It all really boiled down to a fundamental question that was just echoing across trading desks everywhere. Is SpaceX actually worth this much right now? Investors realized that while they were buying into an incredible future, Mars, Starlink, AI, that future is still years, maybe even decades away. Did it really justify a $2 trillion price tag today? The market decided, rather violently, that the answer was no. And so the dust begins to settle.
And that leads us to Section 5, the aftermath and future. What actually comes next?
And this brilliantly illustrates the complete journey. Look at this timeline. Day 0, we launch at 135. Day 1, the opening trade pushes it to around 150. Days later, pure euphoria takes it to a market peak above 225. And then reality hits. Weeks later, the sell-off aftermath leaves us hovering in the $150 to $160 range. Now, while it's still technically above the initial IPO price, this steep fall erased hundreds of billions of dollars in market value from that peak. It is a stunning, undeniable representation of IPO volatility.
So, SpaceX remains one of the most intensely watched companies in the world, for sure, but reality is now testing them with 3 really big questions. First, can Starlink actually continue growing at the pace required to fund everything else? Second, over the next few earnings cycles, can SpaceX fundamentally justify its massive valuation with real, tangible revenue? And third, and perhaps most importantly for the stock price going forward, what happens when that lockup period expires and millions of restricted shares finally flood the market?
The SpaceX story is just a complete masterclass in market mechanics. It shows exactly how engineered scarcity drives euphoria and how fundamental reality always, eventually, comes to collect. So looking at everything we've covered today, would you buy SpaceX after this massive drop? Or are you going to wait it out? Thanks for joining me for this explainer. Keep asking the right questions, and I'll catch you next time.